You know, there is a saying that making money is a skill, but keeping money is an art form. Most people, and I mean 99% of folks, are playing offense their whole lives. They are hustling, working overtime, trying to get that next pay raise. But Charles Koch, he mastered the defense. Imagine for a second that every dollar you own is a soldier. Most people send their soldiers out to die in the war of inflation, taxes, and bad spending. Charles Koch built a bunker so deep and so strong that not only do his soldiers survive, they recruit an army while they sleep. Today, I'm going to walk you through the fortress of Koch Industries. We aren't just talking about how he got rich. We are going to break down the invisible shield he uses to protect that capital from the government, from the market crashes, and even from his own family. Now, settle in, because to understand the genius of Charles Koch, you have to understand the trap that almost every other CEO falls into. It's called the quarterly earnings trap. You see, if you run a company like General Electric or Ford, you have a boss. And that boss is the stock market. Every 3 months, you have to get on a stage and show your report card. If the numbers are down, the stock tanks and you might get fired. This forces smart people to do stupid things. They cut corners, they fire good workers to save a quick buck, and they think in days, not decades. Charles Koch looked at that game and said, "I'm not playing." He kept Koch Industries private. This is the first pillar of protecting capital. Privacy is power. By staying private, he doesn't have to show his report card to anyone but the mirror. He can lose money on a project for 5 years straight if he knows it will make a fortune in year 10. He protects his capital by removing the pressure to perform for strangers. Let's dig a little deeper into where the money actually goes, because this is the part that will blow your mind. Most billionaires, once they make their first billion, they start to live large. They buy the mega yachts, the sports teams, the islands, and sure, Charles lives well, but relative to his wealth, he is incredibly frugal. But here's the statistic that matters. Koch Industries reinvests 90% of its profits back into the company. 90%. Just sit with that for a moment. Imagine if you took 90 cents of every dollar you made and put it into buying better tools, learning new skills, or buying assets that pay you. The compounding math on that over 50 years is terrifyingly large. He isn't just protecting capital, he is feeding it. He treats his money like seed corn. A foolish farmer eats his seeds during the winter and starves next year. Charles plants every single seed, year after year, until he owns the whole harvest. That is how you turn a medium-sized oil business into a global empire that makes more money in a day than most companies make in a year. But you can't talk about protecting capital without talking about the big bad wolf, risk. Now, folks think entrepreneurs are risk takers. They think they are cowboys gambling at the saloon. Charles Koch is the exact opposite. He is an actuary at heart. He protects his fortune by having what we call a fortress balance sheet. While other companies are loading up on debt when interest rates are low, borrowing money to buy back their own stock, which is just a fancy way of artificially inflating their value, Charles is hoarding cash. He keeps billions in liquid assets. Why? Because he knows that winter is coming. He knows that every 10 years or so, the economy falls off a cliff. When 2008 happened and banks were collapsing and everyone was panicking, Charles Koch was calm. He was calm because he had the cash to buy up distressed assets for pennies on the dollar. He protects his capital by ensuring he never has to sell at the bottom. In fact, the bad times are when he makes his best moves. He uses volatility as a weapon. Now, this next part might ruffle some feathers, but we have to be honest about how the world works. If you have billions of dollars, the government is the biggest threat to your bank account. Regulations, taxes, new laws, a stroke of a pen in Washington can wipe out a business model overnight. Charles Koch didn't just hire lobbyists. That's what amateurs do. He built an intellectual ecosystem. He funds universities, think tanks, and policy groups to shape the very ideas that politicians discuss. He calls it the structure of social change. It is a defensive moat built out of ideas. By influencing the philosophy of the country towards free markets and deregulation, he is terraforming the environment to be hospitable to his business. You don't have to agree with his politics to respect the strategy. He isn't just playing the game, he is trying to write the rule book. This is the ultimate form of capital protection, changing the environment so the predator can't survive. There's also a fascinating internal mechanism he uses to stop his company from getting fat and lazy. You see, big companies usually die from the inside. They get bureaucratic. Middle managers start fighting over parking spaces instead of profits. Charles implemented market-based management. It sounds fancy, but it's simple. He brought the free market inside the walls of the company. If one division of Koch Industries sells a product to another division, they charge market price. They compete with each other. If a janitor figures out a way to save the company $10,000, he gets a cut of that savings. This keeps the company lean. It stops the rot. He protects his capital by ensuring that every single employee is thinking like an owner. If you don't add value, you are gone. It's ruthless, yes, but it ensures that the organism stays healthy. Let's talk about the family aspect, because this is where the shirtless to shirt sleeves curse usually happens. You've heard the story. The grandfather builds the empire, the father maintains it, and the son spends it on parties. Charles is terrified of this. He saw what happened to the Vanderbilt family, who were once the richest in the world and now have almost nothing to show for it. He raised his son Chase not just to inherit money, but to inherit a philosophy. From a young age, the Koch kids were taught that they didn't own the money. They were stewards of it. They had to work on cattle ranches and do manual labor. He made sure they understood the sweat that goes into a dollar. By transferring the operating system of his brain to his children, he is protecting the capital from the incompetence of future generations. He isn't leaving them a blank check. He is leaving them a manual on how to run the machine. You also have to look at the diversity of the empire. If you put all your money in tech stocks and the tech bubble bursts, you are broke. If you put it all in oil and the price of crude drops, you are in trouble. Koch Industries is everywhere. They make the asphalt you drive on, the fertilizer for your food, the glass in your windows, the electronics in your phone, and the toilet paper in your bathroom. This isn't just random buying. It's a survival strategy. If the energy sector crashes, the consumer goods sector might be booming. If housing is down, agriculture might be up. By being everywhere, he ensures that no single event can take him down. He has built a ship that is unsinkable because it has 1,000 different watertight compartments. There is a lesson here for you and me, even if we don't have billions. It's about the time horizon. The reason Charles Koch is so successful at protecting capital is that he removed his emotions from the equation. He doesn't panic. He relies on data, logic, and mental models. He views capital as a tool for production, not a ticket to consumption. Most of us get a bonus and think, what can I buy? Charles gets a bonus and thinks, what can I build? That shift in mindset is the difference between being rich for a moment and being wealthy for a lifetime. He understands that money is fluid. It wants to move away from you. You have to build dams, reservoirs, and channels to keep it. So as we wrap this up, I want you to look at your own life. You might not have an oil refinery, but you have capital. You have your savings, your skills, your time. Are you protecting it? Are you reinvesting in yourself like Charles does with his company? Or are you letting the world eat away at your value? The strategies of the ultra-rich aren't magic. They are just magnified versions of common sense and discipline. Charles Koch proved that if you have a strong philosophy and the patience to wait decades, you can build something that outlasts you. I want to know what you think. Is this level of capital accumulation good for the world, or is it too much power for one man to hold? Does his strategy of market-based management sound like a nightmare to work in or a dream come true for a hard worker? Let me know in the comments below. I read every single one, and I love seeing the debate. And folks, if you want to keep learning the blueprints of the American Titans, make sure you subscribe. We are just getting started.